What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Kirk Wisnewski. Wisnewski, did I butcher that? That was all right?
No, you actually said it right. Yep.
Sweet, awesome. And how you doing today, Kirk?
I'm doing great.
Awesome, awesome. And I got some great news for you, Kirk. Today, my very favorite audience member is joining us today. And why is my favorite audience member joining us today? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. Now, why would I do such a silly thing? Well, part of the rules, if you want access to what are called private deals or 506B syndications, you have to have a documented prior substantive relationship, because when the SEC finds out that you've got a certain number in assets under management, they're going to audit you, and they're going to make sure that you're not pretending to be a broker dealer or something like that without a license. That's a big fat no-no. But the more important thing is I want to make sure that you learn how to effectively communicate on the subject of commercial real estate and understand how my guest fits into this business. But before we get too into the details of your business, Kirk, do you want to say a thing or two about yourself?
Yeah. My wife Sharon and I are both into this multifamily investment world. We actually currently are entrepreneurs in the fact that we started a vending machine business about 4 months ago, and we're looking at scaling that business at the same time. But we're just looking at trying to create a family wealth situation. So we're looking at business opportunities and multifacets, and obviously one of them being multifamily.
I love it. I love it. And so the first segment here in the Chance Encounters is going through the 5 distinct motivations. But before that, I have to say, but wait, check your 8. And Kirk, I don't know if you can see through the camera and into the user's device and down at the 7 or 8 o'clock, but there might be this hideous red subscribe button if they haven't hit it yet. And it's a stupid joke, and I always just, but anyway, well, I always have to go through the 5 distinct motivations. I've met a whole whack of investors, syndicators, and operators and stuff like that. And one of the things that jumps out is because these acquisitions can take months, there's plenty of risks involved. I need to make sure that the person I'm talking to will follow through with these deals. And even though we all have our own unique why, I found that I could distill them into these 5 different categories. So let's go through those. The first one, preservation of purchasing power. What's that all about? Well, some people already have a portfolio of assets, and the way that they make ends meet is through the profits from ownership. And the only reason why these guys are going to be making their next acquisition, it's either because inflation is wearing away at the purchasing power of that cash flow, or if they can buy at a steep discount, like when there's an asset crash or something like that, that's when they're going to be making acquisitions. But that's not what I'm up to. I'm not there yet. What I am up to, though, especially because I got this background in technology, specifically it was the CRM industry. I've had an agency since 2011, and what that's all about is mass emailing, building web funnels for accepting transactions online, and of course I've been doing it for real estate since 2014. But the problem with that was I was looking at my boss who was flipping 10 houses a month, and I was looking at how I was paying more in tax than anybody else. And it hit me like, how can I pivot so that instead of having this enormous tax bill and then investing what's left, How can I pivot and get rewarded in the form of deployed capital, aka equity? So that's why I'm doing all of this. But many people, especially youngsters, they get into commercial real estate because they want to take control of their schedule. And maybe that means they want to fast track their retirement, but it might actually just mean that they want to work fewer months per year down the road or fewer weeks per month or something like that. But the main thing is that there's a scaling back, a dialing back as far as their motivations go. Whereas the next group, they're never going to dial it back. They are super duper ambitious after that generational wealth. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're making these acquisitions. But that's fantastic because they're going to be hustling into their 90s. Just like this last group, they're also motivated to keep going even beyond, like when they're getting up in their years. But their motivation is based on finding a sector of society, or maybe it's the environment, maybe it's animals, who knows? But the important thing is, if you want to make a really big impact on a group, then there is a financial aspect that has to be taken care of. And that's why these people are making these acquisitions. So Kirk, out of those 5 different motivations, what combination of those jumped out to you that you would say describes you best?
Yeah, as I say, there's a couple at least for sure. Is that we definitely want to create the family wealth, right? We want to keep the generational wealth going, and we want to get to the point where we're teaching the kids, our grandkids, maybe the great grandkids if we're still around, how to do this business and how to create that passive income and those opportunities of just creating wealth. And the second one is giving back to the community. We're really big. My Sharon was a teacher for about 15 years. And that's something that's deep down in our heart that she just wants to give back. The teachers are, they're not well funded already. They're not well paid. And so we just want to be able to give back to the community like that. Also, I have a deep down love for Special Olympics. And I want to kind of help with the Special Olympics and be able to participate and donate to that program as well. So there's other charities that we want to do, but those are the 2 biggest reasons that we're pursuing this opportunity.
All right. I love it. I love it. So then the next question then has to do with the tolerance for risk assessment. And if you've ever been involved in a 506B deal, securities attorneys, they insist that everybody who's investing and involved fills out this really invasive questionnaire about your finances. It asks all sorts of questions that you're probably not going to be comfortable answering. But when I was going through it, I found that there was one question in particular that I thought didn't really serve the purpose that was intended, and it was the one about risk and how much risk you can tolerate. So what I do is I use this fill in the blanks question to understand that my guest gets that, hey, there are real risks involved. So there are many popular investment asset classes, but I think blank is too risky. Kirk, it can be inside real estate, outside of real estate. What's too risky for you?
For me, is the 401k, the stock market. That was the biggest risk. I played that game for 30 years and just saw just very inconsistent, the ups and downs. And last year, the last year I was in it in 2022, half of the 2022, I lost 21% of my 401k. And I was like, and I have no control of that, right? I don't know what the stocks or the businesses are doing. I can't control any of that. And so to me, that was the riskiest play.
Yep, I completely agree. I don't like the fact that they've got PR departments at all these big publicly traded companies, and so a PR department, their entire job is to spin what's going on and make it sound better. And I'll tell you, when you're involved in a syndication of a commercial real estate property, there is no PR department. It's what you see is what you get as far as the team goes. But let's see here. But that's interesting how it did that. The next part, though, there's a segue for you to let people know that they should subscribe. That thing just kills me every single time. But this next segment that we go through, it's where I pull out the Dan Does Deals Core Competency Cube. And what that's all about, it's got the 6 different roles in a commercial deal. And I go through all 6 sides in every episode. It only takes 2 minutes. But the idea is I want to make sure, as I said, you can effectively communicate on the subject of commercial real estate and also understand how my guest fits into these these deals. And if you want your own copy of the Cube, it's absolutely free. You go to dandoesdeals.com, and like a complete dummy, I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can do, is give away your freebie and not ask for any contact information in return. But again, I want you to print this out. I want you to get very comfortable with the different roles so you can see that they've got an effective team put together. But let's go through the 6 different roles. First one is the repositioner. A repositioner looks at a bunch of different properties because they're acquisitions people, and they do a bunch of paperwork. What are they doing with this paperwork? Well, there's a fancy word for it. It's called underwriting. That means they're doing the math. They're doing the arithmetic. They're figuring out, first of all, is this property even actually making the amount of money that the broker or seller claims it is? Because there's no guarantee that they're being totally above board about that. But what exactly are they looking for when they're doing this math? I call them repositioners. A lot of people call them investors, and these guys investors and these guys investors. I don't think that that's very informative, but a repositioner is thinking, how can they change the property so that there's more upside? How can they find more upside in how the business is run? And one key part of every repositioner's job is they have to have investor relations, talking to financiers, so that's lenders, brokers, like mortgage brokers and whatnot. And financiers are people who only deal with paper and money. So they do not have an official role in asset management, taking care of any of those sorts of things. But the reason why they're such a key part of every repositioner's business is because if you can get a more advantageous loan, then that's automatically going to go to the bottom line, aka the profitability of the business. So it's just one of the expenses that gets smaller. So that's one place that repositioners are going to look. But the more obvious one is operations, cutting expenses, stopping those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns and all that sort of stuff. One of the fortes that I have is a marketing component, and of course, the automation from all the CRMs. And the reason why the marketing is an important part for a GP team is, even if you're like me and you go for, like larger or mid-size apartment complexes, like 100 units or more, in that case, we're often outsourcing to a third party for the operations. But if you still have a vacancy rate problem because that third party management just can't seem to fill the units, you better have some good marketing chops to make sure that you can fill those up. But operations, usually because commercial real estate is so competitive, there's only so much you can achieve by optimizing those expenses and how things run. So the next place that the repositioner looks is the contractor team. They'll do a value add. They'll renovate the units. The idea being that if you've got nicer units, then the next resident will be happy to pay more in rent than the previous ones. But of course, just because you make a unit, you dump some money into capital expenditure. In other words, you make those units nicer. There's no guarantee that you're actually going to be able to collect those extra rents. And of course, you have to make sure that these guys aren't cutting corners. They're not using the wrong kinds of materials and spending too much money on it, because gold plating toilets are not going to give you a return on investment. So the way that you keep that under control, especially if you're like me, and I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two, because you can bet that will not be me. I'd still be stuck at an airport in an hour or two if push came to shove. But when the repositioner has assembled this team and they've got a particular property in mind, they'll turn around to the financier and say, hey, so here's the details of the property. It's 350 units and tens of millions of dollars. You don't, I don't know, happen to have, say, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one other question that must be answered before they're going to say yes. And that is, who is your sponsor? Who's your KP? What's all that all about? Well, if you have taken some sort of coaching program, or you're talking to a guru or something like that, this is the one that I find they tend to gloss over. And what it's all about, let's say hypothetically, let's say you're a physician or an engineer, you've got a network of friends and you want to pool your resources to take over a commercial property. The snag you're going to run into is, if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. Okay, or else the answer is just plain going to be no. On top of that, you need a certain amount of liquidity. And then among the ownership team, you have to have a balance sheet of at least the amount of the loan. But if you got all of those pieces, you've got yourself a commercial real estate deal. So Kirk, as far as you go, like I understand that repositioning and acquisition will be part of your business, but what core competencies do you expect to contribute to your next deal?
Yeah, so I'm basically from my background. I came from 20 plus years as a commercial electrical contractor, project manager, VP. So the numbers don't scare me at all. Doing fancy spreadsheets and whatnot, we have a pretty complex spreadsheet that we use. So as a repositioner, I'm going to I do get more involved with the operation side and the contractor side. Again, contractor being something I'm very, very familiar with. So that doesn't scare me. Even the boots on the ground, right? So I'm not afraid to go walk the property and be a little bit more educated about what I'm looking at, right? Especially being from the contractor world for 20 plus years. So that's kind of where I want to go. So eventually want to graduate to be the asset manager and or sponsor down the road, but it takes time, right? So, but that's where I see myself positioning in these on these teams.
Perfect. So then the next question has to do with buy box or ideal property. And when syndicators, investors are talking about, hey, what's ideal for you? What's your buy box? What's easier to say yes to? We're really asking for three main things. First one has to do with geography. Where is it? Which state, which county, which neighborhood, okay? It's all going to matter, okay? So you need to know that location. The second one is going to be the size. We primarily talk to multifamily investors and syndicators on this show. Sometimes we get people in self-storage or RV parks or, industrial raw land, who knows what it is. But when you're talking about the size and you're talking in multifamily, we do it by unit count. And it's absolutely pivotal because you're going to have a completely different kind of team taking over a 15-unit apartment complex compared to the 150 and up complexes. So that size is going to matter. And the third one is called class. And I don't like the fact that they use class for two different meanings. So I separate them into two different words. The first one is condition. And that is, how old is the property? Like, is it up to date or is it really ancient? And is it beat up or is it, in good repair? And as far as amenities and luxuries, is it full of them or is it really no frills? So that's the condition. The second meaning of class, it's the area where the property is located in. And specifically, that means what's the crime rate like where the property is located? What are the school districts like where the property is located? And how many people go by the property, like in a car or on foot, in any given day? And both of those two meanings of class are rated with the same system as in grade school, where you got A plus at the top and then A minus and B plus and so on. So Kirk, as far as you and your team goes, what's easier to say yes to and more difficult to say no to?
So to answer, you gave the three criteria. So right now we're focusing on Texas. We live in the Dallas-Fort Worth area, so that's why we can put boots on the ground in Dallas-Fort Worth. But we're also looking at the Houston market, San Antonio, and Lubbock markets. So that's where we're at focusing right now. Doesn't mean that we won't go outside of that right now, but that's where our team's focusing on. The size of properties that we're ideally looking for is between 50 to 200 units. Doesn't mean we won't look at more, but that's kind of our ideal range. And then the class of property or the classes is that we're looking for the most popular versions. Like we're looking for the B's and C's, right? So we'd prefer to have a C property in a B area or an A area, right? So we're not afraid to do the upgrades to the units. Where with my background, I'm definitely not worried about doing those things. So that's kind of where we're at, just on a short answer to your question. So I think I answered them all.
Yeah, yep. That's right. You covered it for sure. So the next question then has to do with who is in the audience who you can help disproportionately, like more. And it's honestly my favorite part about commercial real estate. People are so helpful and eager to build teams, give referrals, and even though that's true, the fact is, since we all have our own unique skill sets, we're going to be better suited to help some people more than others. Me, because I'm the internet guy and with my marketing background and all that, the sponsors and KPs are the people who I've generally been looking for more often than not. But the locals are the other ones, again, because I'm from the internet. There's going to need to be boots on the ground, people who can take care of the property, because it's not going to be me. So Kirk, I imagine you're the same deal of where, you're eager to learn, like meet more sponsors so that, you can really make good use of your contracting experience and different things like that. But I don't want to put words in your mouth. And if you have any 506B deals going right now, don't entice any investors about your particular deal, because the SEC doesn't like that. They'll get answered. So if you have a donut or something, don't wave it in front of the camera, or you might accidentally entice an investor. But who are you eager to help?
Yeah, you're exactly right. It's the sponsors, right? The other kind of team members that would be looking for, right, is the boots on the ground kind of thing. If we found a property outside of our range kind of thing, right, that was Houston, San Antonio, those are about a 4 or 5 hour drive for me. Not saying I wouldn't do it, but those are some of the team members that we would look to just team up with.
All right, beautiful. And then
the sponsors and developing those relationships with the sponsors, right? That's something that we're continuing to grow. So we don't want to rely just on one sponsor, right? They may not fit their buy box, and so we're trying to grow our sponsor team as well.
Yeah, for sure. And if you're doing a 506B one, that's kind of one where I think that a lot of these sponsors, like the coaches, they kind of have you behind the 8 ball, because they don't tell you about that sponsorship part. And then if you don't know any other sponsors, then, they can really kind of strong arm you into taking a real haircut. You're basically volunteering. Right. Yeah. And that's not cool. I think it's predatory. But as far as how to reach out, me, I've got this distinct last name, so I'm super duper easy to find, especially on LinkedIn, which is the best. It's the best social media platform as far as finding me. I spend more time on there than any of the others. But if you do use your phone to scan this QR code, that goes to the FAQs page of 506B-Me, which is the platform I offer to document your substantive relationships. And as I mentioned before, that's the thing that the SEC will look at once you have a certain number of assets under management. They'll make sure it's like, okay, are you publicly soliciting people and then trying to get away with a 506B filing? Because that's not cool at all. So that's what I offer. But Kirk, as far as you go, I know you're on LinkedIn as well, but maybe there's a website or something that's better. How should people reach out?
Yeah, we're actually reconstructing our website right now, but the name of our company is TGIF Capital. TGIF standing for the goal is freedom, right? We want to help people buy their freedom, and so that's under construction right now. But easily can be reached email with Kirk KIRK at tgifcapital.com. All right, and like you said, we got the LinkedIn and even IG. So.
All right, excellent. And so then the last thing is actually not for you, Kirk. It's for you in the audience, which is a public service announcement. If you've been watching this episode and you've been experiencing like searing pains in your eyeballs, like migraine-like symptoms, it's probably the hideous subscribe button that's down there. And if you just click on it, then it turns into the gray one, and it has like those symptoms are not a side effect of those. And okay, to be totally honest, the reason why I want you to click on it is because if enough people do, then YouTube will actually start paying for these videos instead of me. I think that would be amazing. And the effect for you, it doesn't cost you anything. I don't even think, like, I don't get access to your email, so I'm not going to spam you or anything. But on YouTube, my videos may show up on your list of suggestions. You can feel free to ignore those suggestions, because I just appreciate the fact that you spent this time with me. Just like Kirk, I appreciate you joining me today. This has been great getting to know you a little bit better.
Thanks for the opportunity, Dan. I've really enjoyed it.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 B me, everybody.